pre-trading weekend video clip, and it's Saturday the 22nd of January. I'm looking here at a chart of the DAX weekly. Looking at the DAX because the DAX has given us the clearest reversal signal so far of the markets I follow, so I thought it would be useful just to go back and have a look at how it's performed. A fairly similar pattern. I mean, in fact, the actual peak came in here around, I think, 8151 thereabouts. We saw a very similar peak back in January. I think it was 2000, maybe slightly later in the year, but the first quarter, I think, at I think 8136. So we've got a massive double top on the DAX, huge great thing, and also the fall, very significant fall down to 2000 odd. So from 8,000 odd down to 2,000 odd is a 75% decline. Pretty dramatic stuff. How we count this is fairly irrelevant. I mean, because we've got a higher high here, this can be corrective, no problem at all. This looks like a 5. I mean, okay, we've got the problem with a third of a third, which I'll look at in a minute, but it looks like a 5. So if you count that, you clearly got a 1 there, clearly got a 2 there. The problem we have is this thing there doesn't look like a third of a third. So maybe the count, maybe what wave 3 actually is 1, 2, then 1, 2, 3, 4, 5. Maybe that's 4 and that's 5. Anyways, again, it looks impulsive. We can divide it into 5 waves. The all-time peak is there. So it's what comes in after that peak, which is really of more importance. And this decline here looks to be impulsive again. We've got a 1, 2, perhaps an extended 1, 2, 3, then maybe a 4, 5 wiggle here, and then a 4 and a 5. But again, the DAX halved, well, more than halved in that pretty incredible period. I mean, we're talking about a decade, or 1 decade, and it's gone down 70%, then trebled, quadrupled, and then halved again. And then of course bounced up quite strongly. Now, having seen an impulsive decline there, which okay, it's a bit debatable with these things, but we'd expect a correction, and then we'd expect another leg down. Having said that, we have also got the triangular count. So the triangular count is the same as the Footsie basically. So we got the upper parameter there, lower parameter here. So again, we could be seeing that this rally here, as with Footsie, could want to make the parameter around 8,000 again, see a triple top before we fall down to the lower parameter once more. But there is certainly a case that the peak here is more important. So let's now have a look at the shorter term action on the DAX. A quick look at the daily chart. I've got this clear 1, 2, count the 3 to there. It's a 4-way drift, and then this 5th wave here, starting from probably, I guess it's pretty easy to count it from that low there, which is probably around August. And this sort of drift here would be the 4th wave, fairly erratic. So let's now have a look at the short term action just to see how this thing pans out. Just expand the chart slightly. Okay, so we have 1, 2, 3 to there, then this. So we're looking at the January low into the recent peak. That's possibly the 5th of a 5th of a 5th, maybe of a 5th. I mean, it's we've got quite a substantial case here for a decent fallback. So I'll just go down to a shorter term chart. Okay, here's the hourly chart. And I guess 1, 2, 3, 4, then a really nice clear 5th wave in 5 parts into this peak here. What's more, we're going to go down to a slightly shorter term chart, look at this, but what's more, we have got a nice clear 5-wave pattern from that peak. I mean, you rarely see actually Elliott patterns pan out quite this nicely. I mean, all the I's are dotted, the T's are crossed. And we have a really strong case for a fall on the DAX. Let's go down a scale. Okay, here's the 10-minute chart. There's the peak. So we got a 1, and a 2, and a 3, and a 4 and a 5. Okay, nice and clear. I did say in the report, I think yesterday, that it was possible this could have been the 4th wave, but in the event it's quite clear that we're going to have 5 waves down. We've now got a B, a nice clear C, and we started to pull back. So the DAX has given a sell signal. There's no doubt about that. Stops, I would suggest, well, above here is the obvious one, around 71.60 odd. 71.25 is an alternative. In fact, 71.25 should not be breached on this pattern. So yeah, I think 71.25 is probably a pretty good level. It's still 75 points away, of course, so you've got to bear that in mind. Problem with very short-term trading is that using 20-30 point stops, very vulnerable, especially in this kind of action where you could see very fast action. And of course, the icing on the cake, if that's the right expression, is that it was expiry yesterday. Expiry is often a pivotal move. And on the DAX we saw this peak, which looks pretty pivotal to me. Okay, I'm just going to have a quick look at the retracement on that. Okay, just put the retracement in line. You'll see the 61.8% was around there. So this has blipped above that. Not for long though. 10-minute chart, so less than an hour, and we didn't see acceptance above that level. In fact, we saw a clear rejection. Okay, so we're in sell mode on the DAX, most definitely. Of course, you never know for sure what's going to work out, even despite all the evidence. The market's going to do what they want to do. That's why we use some kind of protection. Personally, I bought an ETF on the DAX last week. I did quote the code in the newsletter, so in the daily reports. So if you prefer to trade in that way, then that's obviously up to you. These video clips are not investment advice. I'm just discussing my own strategies. So these are not recommendations. If you wish to follow me, then you must take appropriate advice. Beware of all risks, etc. And obviously, if you profit, you keep the profit, and if you lose, you bear the loss. I don't wish to share in your profits, and clearly I don't wish to share in your losses. Okay, let's have a look at Footsie. Okay, a very similar action to the peak on Footsie, so I don't want to go through that again. But this is confused by this this action, which looks like an ABC. A, B, then this 5-wave C wave, suggesting we could then just rally straight up. Okay. However, I think what's probably happened, and this is quite usual at major peaks, is that this 5-wave pattern here is actually a 5th wave failure. So rather than going above 60.90, we've truncated around 60.70. I think that is the peak. So going from there, we then have a fairly nice 5-wave decline. 1, 2, 3, 4, 5. A pretty nice A, B, C, and now a pullback. So it's not as clear as the DAX, mainly because of this failure to go any higher at that point. The action is not as dramatic as the DAX. Let's just have a quick look at the shorter term chart to make sure that the pattern here is pretty clear, and also it's useful for you to see what. So you've got a clear 1, clear 2, and you've got a 1, 2, 3, 4, 5, and a clear 4. Even got 5 waves here actually. It's a really nice pattern. So that low is a low of 1. Now how about this rally? A, B, C. Then a sort of drift sidewell, sort of possible triangular sort of thing as a B, and then a nice C thrust up. Okay, expiry came in a bit earlier in the day, around here, but this is we're not expiry. None of these things are precise in the markets. It's give or take a few hours, even a few days. But that peak there, which is two days before expiry, is the major peak. Then the expiry, a pivot expiry here, is well in line. What we ideally we don't want to see this peak taken out next week. We want to see the market just fall back and maybe do a bounce perhaps here. But again, we have a pretty clear signal, and we'll be looking. I'll be looking at the Monday morning action very carefully. We see a selling spike, then I think that's pretty obvious what one should do. That's again, of course, up to your own trading parameters. It's very difficult to actually give recommendations in the sense that every trader has a different way of doing things, and it's very much up to your own risk parameters as to how you want to trade, and but certainly the biggest mistake I've seen traders make is stops, really. Just having the stops too tight, just giving the trade no chance to breathe, especially when you can see dramatic action, because it's when you get dramatic action, you get volatility, so the market can jerk around quite a lot, and it just doesn't work, really. So this is where the ETF comes in, and also binaries, and also or a more relaxed stance on stops. I think it's almost well, it's critical. Dow next. Look at the DAX, sorry, the Nasdaq before we go on the Dow, just as it's here, as it were. I mean, there's a pretty puzzling decline here. That could be a 3 actually, and that could be a 4. So it's difficult to be too sure. I mean, I suppose this would have been in line with other markets, and that would be wave 1. This would be some kind of 2, and this would be wave 3 starting up, allowing for a bit of a bounce actually before we fall back. So there's a case there. It's, again, not as strong as a DAX, but let's have a look at the Dow now. Okay, here's a Dow. A similar 5-wave move, pretty clear. Now look at the shorter term action. And basically there isn't really much to go on here. I mean, it's a very different pattern. We've got maybe a 1, 2, and then maybe a 1, 2, 3, 4. So I mean, this could be a 5. This could be a 4 maybe. But there's no sign of a peak here. So, I mean, there is no sign of a peak here. You know, the action yesterday, we saw an expiry, we saw the rally up, and then we just saw a drift sideways. We'll have a look at that in a little more detail. But the more detail doesn't really help much. It's still inconclusive. Doesn't look like anything particularly much. So we have we now have Footsie and the DAX both giving a similar story. If we include that a failure to make a fifth on Footsie, but the Dow is currently not on side. Clearly, it will need to join in if we're going to see a substantial decline. It could still be, as I said before, the decline could be corrected. We're still looking at 500 points plus as a minimum, I think, but there could be a lot more here. I think the big question is, are we going to retest the upper parameter of that triangle? That's the question really we can leave for the time being. I think it's a good case we will, but let's see the form of any decline first, and certainly a decline is indicated. Let's go on to gold now. Okay, gold is falling back. I think we're going to see the C wave we've been talking about, so I think it's 1, 2, then a 1, 2, maybe quite a sharp fall here, and then perhaps a 4, 5 to complete a C wave decline and shake out the market. I think the market needs shaking out. You know, the gold bugs are getting a bit too in the majority, I suspect, so a good shakeout on gold is needed. Yeah, the fundamentals remain solid, but as I said before, that's not really that relevant. What's relevant is whether it's all in the price, and I think it's more than all in the price, and I think we're going to go down. So I think shorting gold may make sense. I plan to hang on to my gold holdings and my gold shares, so it's if I see an opportunity, obviously I will via subscribers, but that's my view on gold right now. Quite interesting to compare the gold situation with the pound dollar. I mean, obviously they're both a reflection of the dollar, so you might think they might move in harmony. The big difference is that the gold is very much in vogue, very fashionable, if you like, and yeah, for that reason alone, it's able to go down. The pound, on the other hand, is quite the opposite. Everybody seems to be bearish of the pound. This is an excellent news for those who want to buy the pound or have pounds, as most of us in the UK do. So I think the fact that everybody's bearish, I'm told, I don't actually always look at these things, but people are telling me this is the case, is excellent news, and I think it suggests that the pound will go up. I mean, the whole load of reason for that. I've already gone quite long today, so I'm not going too much longer, but I would say that you know, the pound looks good, and also we have got this 1, 2, now a 3, so we get to see a bit of a 4 here, which we seem to be seeing. Fifth wave. Probably, well, probably to retest this high here, then a bit of a pullback, and then we could see something quite startling, perhaps. So that looks good. Pound euro, no real change on pound euro. I think it still looks positive, mainly because we've got this 1, 2, 3, 4, 5, then a clear A, B, C, a nice thrust up, and this is like an A, B, C. It's quite a sharp A, B, C. So my expectation is we're going to start to see a decent move come in here. It could be quite, again, it could be a real thrust up, given the fact it will be a third of a third. So if you're looking to trade the pound euro, then it might be worth trying to catch that move. Sometimes difficult with currencies, of course, they're 24-hour markets, so those may come in at rather inconvenient times. But yeah, I think there's anyway, a lot happening for once. So it's been a very dull period actually. The last well, not just a few weeks. I mean, November wasn't great. December was really quiet. But things are certainly hotting up now. And I think we should have some really good trading for the next, well, maybe a whole year, depends how it works out. It'll undoubtedly not work out the way that I expect precisely, but hopefully we'll get some decent profits on the way. Thank you for listening, hope you enjoyed that. Have a great weekend in the UK, fantastic day over here in Koh Samui. And I'm still building the house next door, but hopefully it's not too worrisome. Thank you again, bye bye.